Hello traders, this is the first recap video from the weekend update, the bigger picture video. I'm starting it like always with the DAX Index daily chart. There is a few things that we can note on this chart. First of all, important gap that we had between Friday, October the 17th and Monday, October the 20th is filled. Then high of a day on Friday was basically a test of a previous close or Thursday close. When I position my cursor here, we can observe that high was 24,119.66, while this close was 118.89. So previous cash close as a high of a day, while a low of a day. You can see how price closed a bit under daily 50 and a bit under range midpoint, and range midpoint is the midpoint of this 5-month range. However, is this a decisive close? That's the question, and the answer is one big fat no, it's not. And what else we can also add here would be that this area where price closed on a Friday is also 61.8 Fib retrace of the last up move, and that last up move is from October low, which is still a potential OPEX period swing low, up to the high of the previous week. Now, why is this potential OPEX swing low? Why is this doesn't label like okay, that's swing low? Because still this Tuesday of October 21st can be actually swing high. This here is still unresolved, and unfortunately this close isn't a decisive one. It doesn't tell much for us. The price could bounce here and we could also get a downside follow through. So unfortunately we are going to start the next week again with neutral bias, a bias which is going to be breakout dependent, meaning first scenario is okay, price is holding here, they are holding the 61.8, and you can see that the close of a day here it closed at 958, while 61.8 is 951. So they closed basically 7 points below 61.8, and 61.8 is from the daily chart. So 7 points on a daily chart is nothing. It's like a one tick or even less on a smaller time frames. So basically they close right at that 61.8 and without downside follow through. Downside follow through would require a candle like this, a candle of 500 points, and then now just imagine a close, for example, close to be somewhere here, that would be like 400 points, or even here below the monthly low, making new monthly low. So that would be something, while this isn't really nothing much, and therefore it still opens two scenarios. One would be they are holding Friday low, which is now weekly low, and going back inside this range of a previous week, going above this halfback, and we hit here 23,045, then 23,045, I'm sorry, this was 24,027, then 45.45. So that's right there at the halfback. So halfback still important. And for example, for the next week, I'm going to position the eyes right at the halfback and 61.8. So right at the halfback, where was our zone on zones chart was labeled as yesterday RTH low, meaning Thursday RTH low. So basically we're watching now Thursday RTH low and Friday RTH low as inflection points. Why? Because Friday RTH low is low of this week, while Thursday RTH low is the low of the previous week, which was well-formed range with very well-defined upper and lower edge. Those are going to be our breakout points, and as we can see, there is less of 100 points between. This is like 950, well, this is like 045. So between them, there are like 85 points. So here there's going to be eyes, and idea is this. Now, if we got a downside continuation, then we are thinking about this untested close from October 17th and October 17th low, which is monthly low, then lower this area around March double top, and around August low we are likely going to get this in line with the daily 200. On a way up, we are going to think about pushing back into the daily 20, a daily 20 which was very useful in the previous period, because for example here and here it was support, and here and here it was resistance, because they couldn't gain traction or follow through above. Once again, follow through on a daily chart isn't just a close like this, for example. You need to have higher highs and higher closes with a follow through. This push higher failed. This push higher, yes, they formed a new all-time high, but at the end of the day they failed. This push lower failed, and we are still in a range. And it is very important when we are observing DAX and comparing DAX with the US markets. It is very important, it's critical for all traders to understand that we are still trading range while they are trading trend. Because when we observe US markets, and for start I will compare futures, S&P futures with Nasdaq futures, they are still trending. Why? Because the gap which was made between last Friday and Monday of this week is still intact on Nasdaq, while S&P almost filled it. And some other markets filled it, like I think Dow Jones filled it. So filling this gap was long. They almost filled it. As you can see here, for example, this high here was 841.25, while this low is 843.50. That's like 225 points only. What that says is that buyers were aggressive in front running the lower, in this case, the lower end of a gap. And once again, like our gap on DAX, we can say the same, for example, for this gap on Nasdaq, that both upper end and lower end are important. And we on DAX had reactions both on the upper end. Let's go back to DAX. So these here reactions from Thursday, October the 23rd and Thursday, October 30th were from the upper end of a gap. While on Friday, we got reactions from the lower end of a gap. And now let's include here not futures, but indices. Let's compare S&P and Nasdaq indices with the DAX. Okay, so what can we see here? S&P four red days in a row, but does it really going anywhere? And the answer is no. Nasdaq three red days in a row, but is it going anywhere? And the answer is also no. So this structure here and this structure here, I think it should be observed as a 5-day balance, and to observe where those markets are going to break from that balance. They're still ranging, although we had some indications, some bearish indications about breadth of the market, about this and that. Some of the big earnings were negative, and yet they are still holding. Powell was hawkish a bit, speaking about no December cut, and yet they're holding. So on a daily basis, when we go down smaller time frames, we obviously can, in this kind of environment, find both bullish and bearish setups, right? But what could be swing short here? We still didn't get that kind of thing, except that we could observe both on Nasdaq futures and on Nasdaq index, when we include Bollinger Bands, that, for example, this is an outlier market behavior. Look at this, 3 candles above Bollinger Band. And whenever that was the case, price went back inside the Bollinger Bands. So, for example, that thing, although Bollinger Band is something that is perceived by many traders as something that is outdated, can be useful in these things, can be a warning sign that, hey, buddy, you don't buy these candles here that are sticking outside of the Bollinger Band, because likely they're going to go back inside and you're going to get better chance. And that this is also a warning sign which can open some short-term, in this case only short-term, sells, because for anything that is going to give you more, a support needs to be broken. And one of the things that can also be a warning sign for buyers here would be the distance from the daily 20. Daily 20 as a midpoint of the Bollinger Band, and you can drag your ruler, which is going to give you information, for example, from here, from the last test up to the high. So S&P made like a 3.5% and the number of points, and then you can go to the left and observe in which cases you got the pullback. And basically by observing that for some time, you can get some ideas about what is the statistic of those moves which are going to be like overbought moves. Okay, let's move further, because all of this so far were on a daily chart, and on daily chart we can say, okay, these are balances, and okay, they're making some 3 or 4 red days, but without downside follow. That's very important. So you got a bunch of red days, and yet it's not going anywhere. But when we go on a weekly chart like this, so okay, this is DAX weekly, and one of the most boring weekly charts ever, because they're in the tight range for DAX. This 1000 points on DAX, this is like less than 4 daily 8 years. DAX can make 1000 points in 2 days. And this is really tight consolidation for DAX and for the daily 8 year, which is anywhere between 270 and 300 points. Then when we go to the S&P weekly, look at this candle. So there is still a tiny here part of a gap which is unfilled. And look at this doji. When we go to the left, and we go to the left, for example, to here, which is April, and all the way to October 2023, do you see anywhere here a candle like that? And the answer is no. However, we had some other dojis, like for example this, which was basically inside this candle, and this one, which is inside this candle, which didn't provide any kind of downside follow-through, because this and this are actually not like bearish candle under quotes, while this one can be a bearish candle. And when you see a rejection tail this size on a weekly chart, this is also a call for caution. Now, to make a conclusion about DAX and the US markets, DAX, no change whatsoever, it is in the range. S&P, Nasdaq, can be some signs of a potential change, but so far nothing still decisively there. Yes, they poked above daily Bollinger, yes, they went back, and yes, S&P is having this kind of candle. They made new all-time high. Nasdaq went up above this channel which was holding the price, or this upper end of a channel which was holding the price for quite some time. And look at this candle, and this would be on Dow also new all-time high. And the only US index that didn't make all-time high would be Russell, which is holding above the previous all-time highs, this one from November 2021 and this one from November 2024, but without weekly follow-through above. And when we are speaking about US markets and what can be next, can there be some, for example, down move, because those markets would really use a liquidation break and a pullback, I think we need to observe all of those markets and maybe to find some clues on one of those markets. For example, Russell could be that kind of market. If they cannot hold here because they didn't make upside follow-through and start to dip below this, maybe that's going to be a sign. If, for example, S&P filled that gap and go below the gap, that can be a sign. The same can be obviously said for Nasdaq. And finally, let's observe monthly charts. And when we go monthly, this is DAX monthly chart with several rejection tails. These are those 5 months. Let's go blank And you can see how October high was what exactly? Marginal higher high. No upside follow through. Look where the body of the candle is. All the way down in the last quarter of the month. Now, when we observe that with S&P, you could say easily that on S&P monthly chart, nothing bearish is going on there. We are in the very strong uptrend. Same can be said about Nasdaq. Same can be said about Dow Jones. And this is something that is interesting, because when you position your cursor here above those previous all-time highs, there is not much going on here. And yes, monthly candle closed above. But this, we are speaking here about months, while on weekly charts we are speaking about weeks. So all of that, are they going to hold or to dip below? All of that takes time. But we don't have in day trading so much time, in like months and more, and that is why we are observing weekly charts, but we are deducting and making some conclusions mostly on a daily chart. The daily chart is for the day trader and short-term swing trader the best possible chart, and here we are still having those gaps, both on futures between last Friday and Monday of this week, and on index this and this, this and this. Let's turn off the Bollinger Band so you can see this. And this breakout is still holding. This structure isn't a healthy and happy structure, and this structure can be filled. What's going to happen if they fill that structure and go all the way back to here? Probably going to be a bounce. And for downside follow through, then you would need to see a behavior like this. They're feeling that, bouncing, making a lower high and going back below this. That's something, for example, the person I would like to see to press on a short side a bit harder, or maybe find some swing short entry point. We are still guessing. That is very important. We are guessing because these markets made new all-time high this week, and there is nothing on the upside which is resistance. So all of this is like guesswork. And again, we on DAX are trading range, while this is still strong uptrend. When we can make some conclusions with Bollingers, with the thing that the market is really overbought, and the thing that they are making red candles, but they still don't make a downside follow through. So all of this is something to be observed for the next week, a week in which there is really nothing much in the economic calendar. There are some US data which are not capable really to move the market, and the ones that are capable to move the market, like core PCI index and NFP report, are labeled tentative for the Friday, which means it depends on the US government shutdown. If they seize that shutdown, then we are going to have Friday as the big dog with big potential catalysts. If a shutdown persists, then nothing is important of scheduled data. On the earnings side of the things, all of the big companies, except Nvidia, which is going to report later, are already reported. And on the German side of the thing, BMW at Wednesday, Rheinmetall and Continental on Thursday. So that would be it about the bigger picture video. Once again, observing gaps on S&P and Nasdaq, and observing these here as two potential scenario. One is going back inside that previous week range over the Thursday RTH low, meaning over this area around 24,045, while a bearish scenario requires breakdown and follow through below Friday low, which is going to be labeled as a previous week low from Monday. So that will be it in this first video.